York. Say hello if you can hear me, you can see me, and the stream is good. Say hello, say good morning. Let me know that everything is working. You can type into the comment box. Hello, Ashley. Hello, Afriam. Hello, Andrew. Hello, Peter. Welcome, everyone. I'm so happy. Hello, Karen. Amir. If you are brand new here to our Monday live stream, let me know. If you're new, type in new because I want to give you a special shout out. I know that this is the favorite session of a lot of our viewers, so a lot of people return week after week because they know how important it is to prepare for the new trading week. But if you're brand new, welcome Amir, Mulungi, May, good morning, Gitane, wonderful. Safiso, Todd, I'm so happy to see so many of you that are new. Now, for those of you that are new, what are you trading? Are you trading Forex? Are you trading gold? Are you trading indices? I want to share my thoughts on as many of that as possible. So let me know what it is that you trade. This is definitely a very, very busy trading week. So if you're brand new, this is a really good time to be joining us because there is so much to talk about this week. And there's so much that could move markets this week. Now, the only difference between this week and normal weeks is that normally I have Boris with me, but Boris is on holiday today. He'll be back tomorrow when we live trade the inflation data, US CPI. But he is off today. And I encourage you, make sure that you subscribe for notifications because we're live trading CPI tomorrow at 8:10 a.m. And if you want to be notified of those sessions, you need to subscribe and smash that bell. It's going to be streaming on YouTube as well as X. And we love to trade news, and knock on wood, I've got some wood in my desk. We have been trading them very, very well. So I hope that tomorrow will be just as good. But either way, we're going to talk about what to expect and plan to be prepared for this very busy trading week. So it sounds like Peter trades futures, NASDAQ, gold, ES, and FX. I specialize in FX. I'll talk about gold as well. I'll touch on stocks theoretically, but Boris primarily trades the indices, and so he'll be back with trading the indices tomorrow. And I think it's going to be very, very exciting. Remember, 8:10 a.m. is when we're going to be live trading the U.S. inflation report. All right, so let's go ahead and dive in. As glad to be here, that's a great name, says today is a relatively quiet trading day. In many ways, you can argue that this is the calm before the storm because we have such a busy trading week. We have U.S. inflation data. We have U.S. retail sales data with the RBA rate decision. We have UK jobs, Australia jobs. We have UK GDP. I believe we have GDP from Japan as well. And so we have so much economic data that could potentially move the markets. But the very first thing to talk about, I think, is gold. And hold on one second while I share with you my screen. I actually don't think I've done that yet. Hold on one second. I'm going to move this up and I'm going to move to my gold chart. So bear with me one second. And now I am going to share with you my screen. So share screen, entire window. We're going to share this. Wonderful. Okay, so here we go. Yes, Swiss tariffs. Yes and no. I mean, hold on. I need to maximize the screen so I can see your comments. All right. So this is a daily chart of gold. We're going to zoom in. And end of last week on Friday, I did a post in our members webinar. I talked about how gold prices popped higher, particularly New York gold, because those tariffs began, and Swiss company contacted the U.S. Government, the U.S. Customs Office, and asked whether gold is going to be subjected to 39% tariff. And the U.S. confirmed that it was. And that set gold prices in New York, which is basically CME contracts, jumping $100. I think we can see this on an intraday basis. This was the move right here on Friday, jumping $100 and then trending higher. Now, if we look at the daily chart, it did reach a new high, but there wasn't a significant follow through. Why? because traders thought that maybe they're going to pull it back. Maybe, they're going to walk it back and say, we changed our mind. We're going to clarify after they really understood the ramifications. And as another mutant said, I called it last week. I said it in my video that I posted on YouTube and X, and I also said it in our private webinar with our members that chances are once they realize the consequences of what they said, they would probably walk it back, and that's exactly what happened today or this morning. Basically, the U.S. White House clarified that gold will not be subjected to the 39% tariffs, and that it would be classified as a financial asset and not a good. So therefore, gold prices dropped. And that is exactly, if you attend my sessions, this is what we prepare for. We don't get caught up in the headlines. We don't get caught up in, and I guess the hype of something that is announced. So we see the headlines, we kind of digest what it means, and chances are, given the behavior of this administration, once they understand the consequences and see the market action, I even said they probably did have the CME calling them up and screaming at them, maybe not screaming, but strong arming them in one way or the other to take it back, because the consequences would be so severe. And that's exactly what happened. So hopefully, no need to congratulate me, USA Forever. Hopefully you guys were prepared for this as we fully understood this. And things like this happen all the time. And that's why it's important to sit down and think about this through. So as I said, this week we have quite a bit of data. Glenn's asking a good question. I'm interested in trading FX, but I work 5 a.m. to 1:30 p.m., so I can't do the market open. Any advice? Yeah, I'm assuming you are American, Glenn. And so if that's the case, you can trade the Asia Open. You could also trade the London Open, which is the 2 to 3 a.m. Open. But if you need sleep and you're American, you probably don't want to. But I love trading the Asia session. The Asia session is hands down my favorite trading session to trade. And we make, quite a bit of our pips during the Asia session. So, I'll share some links later on to show how that can be done, but you could definitely trade the Asia session. Okay, so anyway, what are we talking about? Okay, we're talking about the outlook for the week. So I am 7 Eastern time is in London. I'm not sure what you're referring to, but I'm not sure what you're referring to. 7. So basically, Asia session is 8 p.m. Eastern time. So you're gonna be asleep in London, but you can trade the London Open, which is 2 to 3 a.m. So really, there's something to trade at every point in time. It really depends on you. But let's talk about the market outlook. So the most important thing about trading, in my opinion, is that we take a kind of 360 approach to it, where we understand our fundamentals, we have a good technical setup, and then we also, very, very important, take into account what the market sentiment is. That is so important, one of the key pieces of the puzzle. And we'll talk about that today. But market sentiment is very, very important. So in terms of the US dollar, Gatina asked, what is your recommendation for a Forex trader, prop or real money? Why don't you share first, Gatina, where you are located, and I will share that information with you later. All right, so I'm neutral dollars this week. I'm neutral bearish dollars this week. The reason why I'm neutral is because we've got 2 important pieces of data from the US this week: the inflation report as well as the retail sales report. And if we look at our economic calendar, I'm just going to refresh this. If we look at our economic calendar, inflation comes out tomorrow. Inflation comes out at 8:30 tomorrow morning. And we're going to be trading it. I'm going to be going live at 8:10 a.m. Whoops, that's not what I want to do. But I'm going to be going live at 8:10 a.m. If you go on YouTube, you click on live, you'll see that we already have our live trading CPI scheduled. I'm going to be joining it as well. So make sure you join us. This should actually say 8:10. So I'll adjust that later, but I want you all to join me early at 8:10 a.m. for live trading CPI, the biggest event of the month. I'm going to change it right now to say 8:10. Okay, fantastic. So inflation, look at this. This is the consensus, and this is the previous. So the inflation rate is expected to go on a month-to-month basis. The month-to-month basis is expected to drop from 0.3 to 0.2. But the year-over-year rate is expected to grow from 2.7 to 2.8%. Core inflation rate is expected to go up from 2.9 to 3%. Core inflation monthly rate is expected to go from 0.2 to 0.3. So 3 out of 4 of these things are expected to go up. 1 is expected to go down. So pop quiz. And I want those of you that have been here for a while, who've joined me often, to answer this first, because I want to make sure you understand. If inflation is hotter than expected and inflation increases, is that positive for the dollar or negative for the dollar? Say up or down. Is it dollar up or is it dollar, where's my finger? Dollar down. If inflation is hotter than expected, is it going to be positive dollar or negative dollar? Amir says down. Goriola says down. Eddie says down. Olayami says down. I actually love the fact that you guys are all over the place. HMH says up. Michal says up. You know, a whole bunch of you are saying down. A whole bunch of you are saying up, which is great because it means that most of you don't know, you don't understand, and there's confusion. At least half of you are confused, and I think maybe you're confused because there's a different impact on stocks as they are on the dollar, and of course there's a different impact on a short-term basis as there is on a long-term basis. So this is what you should know, which is kind of a hard set rule. So if we have hotter inflation, it should be initially dollar positive. If we have cooler, inflation, it means dollar down. So, some of you may be confused because the impact on the stock market is completely opposite. And, thank you, Fred. Thank you, Another Mutant, for pointing the reason out. And Ashley. So, this is an interactive experience. It's you guys helping each other understand this better. So the greatest impact of inflation on the markets is what it means for what the Federal Reserve will do. Just like Ashley, just like Another Mutant says. So one of the main reasons why Powell has been reluctant to cut interest rates is because inflation is too hot. On a year-over-year basis, inflation is at 2.7%. Core inflation is close to 3%. So most central banks want inflation around 2%. So these are very high levels. It's much higher than 2%. So therefore, they want inflation above around 2%. And the fact that it's too high has prevented them from cutting interest rates. So if inflation goes up to, if inflation goes up to 2.8%, if it even beats to 2.9%, as long as it goes up, it's going to reinforce Powell's fear about inflation being too hot. And it's going to cast doubt on next month's interest rate cut. Now, the opposite is true for stocks. So for those of you that said down, perhaps you meant that hotter inflation, I'm going to type this in, CPI, should be minus stocks. It should be minus stocks because it means that it should be minus stocks because it means that there's less of a chance that the Fed is going to cut interest rates. I don't think it may be so much that it's less of a chance they're going to cut interest rates next month because I think the market's pretty convinced that they will. It's maybe less of a chance that they can give us 2 interest rate cuts this year, which is what the market was really hoping for, which is 2, or the market thinks right now, which is 2 interest rate cuts this year. So, that is important to pay attention to because, typically interest rate cuts is good for stocks. It drives up stocks because it means the interest rates that businesses, consumers are paying on their cars, on their homes, on their credit cards is going to go down. If the inflation rate is too hot, that means that the chance of a big interest rate cut or an aggressive interest rate cut this year is going to go down, meaning that rates will remain high. The U.S. may not get so much relief, and so that's negative for stocks. Now, we always look at something called, I'm going to Google this so you guys can follow how to do this, CME Fed Fund Futures, which is what is priced into the market. How many interest rate cuts is priced in the market? What is Kathy talking about when she's talking about what is priced into the markets? Basically, to find that out, we go to CME Group, CME Fed Fund Futures. So CME Fed Fund Futures, actually, it's the wrong one. We want Fed Watch, the first one. Fed Watch. Okay, so right now, it's the next meeting that's coming up is September. Right now, the current interest rate, this is how to read it. Right now, the current interest rate is 4.25% to 4.5%. And so if we scroll down here, the market thinks that there's an 86% chance of an interest rate cut by the Federal Reserve in September, and a 13% chance that it's going to remain unchanged, which is actually quite interesting because last week it was at 90% chances. This is a slightly lower chance that we're going to have an interest rate cut. Maybe part of the reason why the dollar is up today. If we get a hotter inflation data, this number will probably drop to maybe 82, 80, so forth. So that could go down. And if it goes down, it's going to be good for the dollar. Now, let's look at December. Right now, remember, we're at 4.25%, 4.5%. What does the market think interest rates are going to be at the end of the year? So we're at 4.25%, 4.5%. Pretty much market is pricing in 100% because only a less than 1% chance that rates will not change. So the market's pricing in a 100% chance of one interest rate cut, 125 basis point interest rate cut, and a pretty much 88% chance, because 42 plus 45.4, pretty much 88% chance of interest rates being at 3.75 to 4%. So pretty much 88% chance the market thinks that we'll have 50 basis points of easing by the end of the year. So two separate 25 basis point rate cuts. And this is what we mean by when we say the market is pricing in two interest rate cuts by the end of the year. What is Eugene asking? Inflation is cost of doing business, right? If cost increases in the US, then the value of the dollar goes up. I mean, so there's a short-term, long-term impact, right? The short-term impact, and as traders, the only thing we care about is what it means for the Federal Reserve rate decision in the following month. But in general, of course, the cost of doing business will be more expensive for everyone. It's going to hurt, other countries. It's going to, it's going to hurt the U.S. too. But it's slightly more dollar positive than negative in the long term. But I think that the real ramification is going to kickstart that the fears are going to hurt the U.S. economy more than it is other countries. Because, not to get into politics, but basically part of this administration's strategy is to encourage a lot of these American businesses and foreign businesses to develop in the U.S. and build in the U.S. And this kind of happened in this first term too. But what ends up happening if you get a company like Apple commit, hold on, I don't even know what the number is, but it's like 500, it's like $600 billion in investments to expand its production facilities in the U.S. But, that's just on paper, right? Apple could, buy a building, break ground and not do anything for the next 3 years. It's just a promise. They could just not do anything. It's like 3 years and just a couple more months. They just got to wait it out. They don't really have to invest $600 billion. These other companies these Korean and Japanese companies that are investing into the U.S., they could, make this commitment. They could break ground and then maybe build one building and show that they're making progress, and make up excuses for being delayed, yada yada. It doesn't really need to happen. and then they wait it out for 3 years, and they can, hopefully get their those tariffs removed. So there's a lot of ways they can play this game. I mean, Apple played this game right by, presenting Trump with, 24-ounce gold bar, and they got their production waived. So there's a lot of ways that these companies who are far smarter than me can play this game. And so it may not benefit the US economy as much as the administration hopes, and therefore may end up hurting the US economy more, which therefore could actually be equally dollar negative and lead to the Fed to cut interest rates. I mean, there's so much that this could happen. So other than using the Fed watch no percentage chance of a rate cut, is the dot plot any good? The dot plot is very important because the dot plot is what Federal Reserve officials think should happen. It's what the people who are sitting in the seats who get to cast the vote think is going to happen. Whereas this chart here is what the market thinks is going to happen. So it's very different, right? One is what traders think is going to happen. The other one is what the decision makers think is going to happen. So oftentimes the decision makers, because the dot plot is only released every couple of months, that is delayed and late and tardy. This is much more up to date, and oftentimes that catches up with this. Anyway, let's talk about what to expect data-wise. So many good questions. I love it. Am I criticizing the administration? Glad to be. I don't know. I think I'm being pretty PC. I'm talking about how everyone else plays the game and how it's been done before. So we'll see what ends up happening. Only time will tell whether or not Apple really invests $500 billion, or they just make that commitment, kind of, build a couple of buildings, which won't cost $500 million, and see what happens. All right. So dollar neutral, because yes, the inflation data is expected to be stronger. At the end of the week, on Friday, retail sales is expected to be, I really did not want to click on that. Retail sales are expected to be weaker, but retail sales could be boosted by auto sales. So one piece of data, one very, very important piece of data is expected to be stronger, but retail sales is not. Last week, we had the really bad non-farm payrolls report. The question I want to ask you now is that even if we have a stronger inflation report, do you think that it is going to stop the Fed from cutting interest rates in September? Give me a yes or no. I want to hear. Do you think that it's going to stop the Fed from cutting interest rates in September? Up is not just say yes or no. And then I'll give you what I think. So here's the question. If CPI is hot, will it stop Fed from cutting in September? Where's my question? All right, so let me look at your answers. No, 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 no. One yes. No, no, no. Don't know. I like that. Yes, yes. So once again, kind of half and half, which is great, because it means that you're giving me the opportunity to explain, my thoughts. Because if all of you had the right answer, I'm going to move on. Well, of course, it depends how big the surprise is, right? If it goes to 3.94, if it goes significantly higher, like when I say significantly higher, I mean inflation is expected to go to 2.8. If it goes to 3, that would be very, very hot. And that could certainly stop them. But I think, as many of you have pointed out, the labor data is very rough. The last non-farm payrolls report was very weak. The jobless claims numbers have ticked up. The ISM numbers have been softer. There's definitely been clear signs that the U.S. economy is losing momentum. And, there has been political pressure, but we've seen that Powell doesn't like to bend to the pressure. But I still think that the data is moving in the right direction. Exactly what Another Mutant says. I mean, you took the words out of my mouth. Not bowing to pressure, but on the jobs data. And even if there's a revision, it's a pretty weak release. And I think, we're getting towards the end of the year. I don't think, if we look at the Fed watch, there are only 3 more meetings: September, October, and December. So back to back, October, December could happen. December almost seems too late. So I still think, not because of the pressure from the administration, although I think that does maybe play a little role, but it's really the pressure from the jobs and the administration that I think is going to force their hand anyway. I think that, we're getting to a phase where the labor market is really starting to feel the pain. And I think that even if we get a strong inflation report, unless it's like 3% against 2.8% expected, or this, instead of dropping to 0.2, it goes to like 0.6, 0.7, that is what that we're going to see 25 basis points next month. We did get 50 basis points in September, but I don't think that nothing warrants a big 50 basis points cut next month. Now, you may be alluding to the fact that maybe they could do 50 basis points in December and give us a Santa Claus rally. Yes, maybe, but we'll see. I mean, you also, another mutant is so smart. I love having you in the room. Jackson Hole is next week. And so Jackson Hole is the big meeting that all these Fed presidents and governors and everyone involved sit together and have thoughtful conversations. And oftentimes the statement from the Fed chair will use the Jackson Hole meeting, which is next week. Is it next week? Let me just double check. Hold on. It's either Jackson Hole Fed Summit. 21 to 23. Yes, next week. So they oftentimes, this is as 21 to 23, oftentimes they will use that meeting to telegraph what they plan to do. And so that's going to be very important to watch next week to see whether or not they start to get more dovish. If they get more dovish and this dovish talk, like another mutant says, then yes, everything is going to move towards an interest rate cut in September. So I don't think that the inflation report, I certainly think if it's a hotter inflation report, that it's going to lead to some short-term upside opportunity in the dollar and an opportunity to sell the NASDAQ, maybe to sell gold. But I think that it won't last for very long unless it's huge blowout. And that's part of the reason why there's so many moving parts. It's important to sit in the room and trade with us tomorrow at 8:10 a.m. So make sure you join us on X or on YouTube. So I'm neutral bearish dollars because while I think tomorrow's inflation report is going to be stronger, ultimately, I think that the Fed is going to cut interest rates. So I think the dollar is still going to be in a downtrend. I still think that's going to be a sell on rally opportunity. I'm bullish euros. We've had a couple of weak Eurozone data, not great, but the ECB is at the end of its easing cycle. And so they are pretty much done. Now, tomorrow we do have the zoo survey from the Eurozone. And I think that's going to be a little weaker because, those tariffs were announced, they were confirmed, and, the market doesn't like that. But for the most part, I think that the euro is headed to 120. I think that it's a buy and dip. It's holding up really, really well despite the weaker weaker industrial production data we had last week. So I am bullish euros. I'm bearish pounds this week because we have this is a big week for pound. We have the employment report tomorrow. So tomorrow's a pretty big day. We have the GDP report, the first Q2 GDP report on Thursday. And then on Friday, we have industrial production and the trade balance. So a lot of UK data this week. So I think most of them are going to be weaker. I think the UK economy has hit a snag. I think that we did have weaker retail sales and trade. So I think most of the data is going to be weaker. I think it's going to drive the British pound lower. We have a Reserve Bank of Australia interest rate decision tonight. So we've got an RBA interest rate decision tonight. And I think that there is a very good chance that the RBA is going to cut interest rates, that the RBA could lower interest rates by 25 basis points. That's completely what's priced into the market. So remember, last meeting they had, they surprised the market by leaving interest rates unchanged. So they surprised the market by leaving interest rates unchanged. And this is important because now when they left interest rates unchanged, it said that it wasn't a matter of if, it was just a matter of when. And so let me show you this image. Whenever we have central bank rate decisions, I compile this table that shows you how the economy changed from one meeting to the next. And based upon this, once again, pop quiz. Do you see more green or red or even? Do you see more green or red? Or is it about even? What do you think? More green or red for Australia? Come on. I know. More green. Okay, looks evenish. I mean, there's no wrong answers for this one. Some of them there are wrong answers, but for this one in particular, there's no wrong answers. Okay. So, you're right. I mean, I'm not counting it. Sometimes, some of you guys are so smart that you do count it. But in general, there is pretty much just as much red as there is green. I think it's pretty much even. But the RBA, they did not cut interest rates last time. And this time around, we have, stronger retail sales. Labor market activity was weaker. Inflation data, remember, inflation is so important. Inflation is weaker. And look at these numbers on the quarterly and year over year basis. Last time when they met, CPI year over year was 2.4%. Now it's 2.1%. Remember, I told you that central banks like to have their inflation around 2%. And it dropped a lot. It dropped pretty much all the way down to 2.1%. So it's a pretty big drop. And this is single-handedly, I think, is going to push them to cut interest rates. Housing market data wasn't terrible. Activity, business confidence, trade balance is good. Leading indicators are down. Manufacturing activity pulled back a little bit, but very marginally. We had nice upticks in PMI services and composite. And then GDP was down a little bit. Trade data kind of mixed. So if I was the RBA, they would either, I think, leave interest rates unchanged again, but the inflation data is pretty low, or cut and then sound wishy-washy about whether or not, or another way to say it, sound non-committal about whether or not they should be cutting interest rates again. So it's I am bearish, but I'm bearish neutral. And so I do think that, I do think that Aussie could fall a little bit. It looks like it's pulling back a little bit. But I think that there may not be significant losses. The Canadian dollar, on the other hand, I think is due for a much more significant rally because we had very, very ugly, Canadian jobs data on Friday. Horrendous numbers. I mean, if we go back to, where's this? Friday. We had the Canadian jobs report. I mean, look at this. 40,000 jobs lost, 50,000 full-time jobs lost, and a weaker than expected 10,000 part-time job gain. So terrible, terrible Canadian jobs report. Now, we don't have much in the way of Canadian data this week. It's all going to be about the US dollar, but I'm quite bearish dollar CAD, I think, or Canadian dollar in general. I love trading Canadian dollar crosses like CAD Swiss, Aussie CAD, Kiwi CAD, Euro CAD. I love that stuff. And so I'm going to be really looking for opportunities to sell CAD against other things. Kiwi, nothing going on this week. No data except for PMIs on Thursday. It's going to trade exclusively on how the market feels about the US dollar, Euro, Australian dollar. So, that's kind of, when it's neutral, it's kind of free reign. We can trade anything. Swiss franc, I'm bearish Swiss francs. The tariff for Switzerland, obviously very, very bad, going to hurt the economy a lot. And they probably, make them to push interest rates down to negative. So weaker all around. And then I'm bullish yen. That is probably going to be, we're going to have Japanese GDP numbers this week. They're expected to be stronger, because we have stronger retail sales and trade data. So a lot going on that could drive those currencies up. So that's my fundamental outlook. Now let's take a look at it technically and take a look at the sentiment in general. So as I said, gold pulling back, this is a really huge, resistance level here. If you haven't noticed, it's been like a huge resistance level, stopped here, here, give or take, huge resistance level. I mean, we really didn't test it last week, but if inflation is harder, we could come down to the bottom. It's just been basically range trading somewhere around this region here. And so I think it's going to remain in this range for most of August. I don't see a real big reason for a breakout. So looking at euro, as I said, I am bullish euros. We got lower highs, lower lows. We think inflation data could be a little stronger. We could pull back, and I'd probably be a buyer somewhere around this region over here. I think it's going to hold 115. So, we'll have to see. But overall, I'm still bullish euro dollar. Dollar yen, we find some resistance here. I think it could break out to the upside here. I don't think it's going to happen before the inflation data. I think it's all going to be based upon the inflation data. If we get a harder number, then we'll go up and then go down. If we get a weaker number, I'm going to love trading dollar yen tomorrow. And we'll lay out which currencies that we're going to trade. If we get a weaker number, then we're going down to 146. I am mostly bearish dollar yen. Dollar CAD, I really like I said, selling Canadian dollars. This looks like, to me, that we're trying to test the top of this range and that we're going to head up higher. So we'll have to see what happens. Dollar Swiss looks super bullish. Looks like it wants to go up to the 100 SMA. Pound dollar looks bearish. As I said, I'm quite bearish pound dollars. It looks like it wants to drop below here. If it drops below 134, we can get down to 132 and change. Aussie, also a possibility of a deeper correction over here. And then Kiwi is going to trade on a technical basis, also looks kind of bearish. But I think that it's going to trade based upon, how market feels about Aussie and Kiwi. So, when I trade, I always use my indicator ZIP, and I use the other ones for moving average clearance. Right now, we're in the sell zone for the euro dollar, so it confirms my idea that we have a little bit more of a pullback before a rally. Dollar yen's in the buy zone. So the way I combine my fundamentals with technicals is I got my fundamental thesis. I look for our ZIP alerts, which happen, we've set up our automated alerts here. So every morning we kind of look for our setups. We don't trade Sunday, Monday, so we didn't take any trades this week, but we've done, very, very well so far. And then on a sentiment basis, stock futures are up. Market is positive risk today. U.S. yields are flat. The dollar is up across the board. So if you're trading today, it's very, very important to make sure that you are in sync with the market sentiment, because it really, tells us what's going on. All right. So if I want you all, where's my Boris created this QR code. If you haven't done so already, make sure you join our free community, because use this QR code, put your phone to the screen, because some of you are asking questions about who's the best broker. Click on brokers and prop firms. You'll get a list, any good brokers for Canadians. Basically ACAP, or you can use Oanda, or DNA Markets is also a broker. Our favorite prop firm, Apex, is actually still running, is 90% off offer this week. So best futures prop firm that you can use to trade out of Canada as well. And the US is Apex. If you're trading Forex CFDs, then, we recommend Think Markets or DNA Markets. So everything is over here. If you want to learn my ZIP strategy, you can go to our Forex starter course under learning. This is free to everyone who's a community member, and you can learn the strategy. As a paid member, you actually get the indicator, and you get the alerts, you get my trade ideas, and you get to participate in our VIP training every single day. And you get to see how I perform the sentiment analysis every single day. You want to look at the dollar index chart? Sure thing. Looking at the dollar index chart, we definitely have a little bit of a reversal candle. It rallied, doesn't look that good. I mean, it still looks bearish to me. I think that it could definitely move lower. Will be just like you, report everything while you sit back. As you're talking about my AI. How are they doing that, USA? Please email me, Kathy@bktraders.com. If you see something that the AI is sitting back while, reporting everything while I'm drinking coffee, I'm not that tech savvy. So you sound like you are. I would love to see examples of this, because I'm always interested in seeing how everything is, everyone's doing now. DNA is active with the code. You can click on, where's this? BK Traders Community, Brokers and Prop Firms. And you can just click on this code as BK Traders. Yes, I will. That's a good suggestion. Here's the link. You can also use the QR code, which where's my banner? Here, join the QR code. I gotta remove the this, but yeah, you can use the QR code that you see here to join our community, join our free community here. If you want the link, let me copy it into this box here, and you can join the free community there. Alrighty. So as I said, tomorrow, live trading U.S. inflation data starting at 8:10 a.m. I will be joining Boris to do this. So make sure you join us at 8:10 a.m. on X and on YouTube. It's going to be a great session. We're going to be live trading. So make sure you join us over here and subscribe to our channel. We just hit 100,000 this week, last week. I'm so proud of that. And thank you all for participating in that, and thank you so much. Here you go, Andy. Let me copy this for you. Any other questions before I turn off? If not, have a great day, and USA forever. Please send me whatever it is that you are seeing on these AI people, because I want to see if I can. I'm always looking for ways to make my life easier. So let me know. All right. Have a great day, everyone. And remember, join our free trading community, subscribe to our YouTube channel. Apex is still running its 90% off offer, and have a great day. See you all tomorrow for live trading.